Hi everyone, this is Shivani. Thank you so much for joining another LeadSquared Lending Roundtable. So today we are digitizing housing finance to become future ready. So that's essentially our topic of discussion. And we have three key members who are going to take us through this. So we of course have Ms. Jyotirlata, who is the Chief Technology Officer at Godrej Housing Finance. Previously, she's also spent a decade at ICICI Bank and TCS. We also have with us Mr. Ram Naresh, who is the Chief Business Officer at Avas Financiers. So it so happens that he's also been at ICICI Bank along with Nestle India, Bajaj Finance, GE Money, and loads more. So that's your panel as such today. And as always, our CEO Nilesh is there, who always hosts these panels. So thank you so much, Nilesh, and taking us through this. So with that, I will go backstage, but just a quick reminder to the audience, if you have questions, please do keep them coming, or if you just want to say hi, you're free to say that as well. So just putting your comments on the chat section, and if you have questions, just put that on questions so we can address that directly. We will also have some polls, so please do engage with us there. All right, so with that, Nilesh, over to you.
Thank you so much, Shivani. Thank you for organizing the another panel discussion here, and thank you, Mr. Ram and Jyoti, for coming on to this session today. Now, of course, the whole for me the big thing is that the home loan rates are the lowest ever. I think, Mr. Ram.
Yeah, lowest ever.
Lowest ever I have seen. So it's interesting times we are all in, and when I recall when I took my first house. The rates were about 10%, 11% or so. And I think today they are almost, if I may say, 40-45% lower from what they were then. And I'm sure you would have seen, pre-2000, the rates would be even much higher, I would imagine, for people who are taking homes then. So I'll start with Ram. You've been in the lending space for a while. So what has been sort of your, if we sort of take a quick snapshot of what was the housing lending market before, let's say 5-10 years back, or maybe even before, and how it is going to evolve, and what do you see the future of it from here? So if you sort of look at that, I would love to hear your perspective.
Thanks, Nation team, for arranging this forum. So it's always good to get connected to the industry peers, which knowledge which we have acquired over years. Coming to your question, Nilesh, on the housing industry, I think it is an ever-evolving industry. So housing is the largest retail lending product in the country. So no other retail product is close to this. There is close to 22.5 lakh crore AUM, which is dominated by banks. Banks contribute to almost 65%, 67% of the business, 60 to 65%, and 35 to 40% is contributed by the housing finance company. And it is a asset class which every banker would love because of low portfolio quality. It is an emotional product and a high involvement product. And India is underpenetrated on the mortgage market. We have reached double digits. When I joined this industry in 2004, we were 5 to 6% of the GDP. Now we have reached to 10% plus. Whereas in the developed economies, it is anywhere between 70 to 90% of the GDP is mortgages. So we are very low penetrated in terms of mortgages. So I think the story evolved with few players, with few MNC banks starting the retail lending. I think 99, 2000, the retail story started, and mortgages was leading the space then as well. So it is basically focused on the formal segment, which is majorly salaried segment in the top 50 towns. But in the last decade or so, I would say last 5-6 years, close to 100 housing finance company licenses have been issued. So there were 35 housing finance companies till 2014-15, and 2015 till date, I think close to 100 have been issued, and majority of them have come into the affordable housing space. So affordable housing space again is a very widely used subject. For a formal housing finance company, affordable is 35 lakhs. For a company like ours, affordable is 3 lakhs. So there is a wide variation between the definition of affordable. So our average ticket size in Awas Financials is around 9.5 lakh rupees. So we have a separate vertical. I have a separate business head who runs affordable piece, which contributes to around 10% of my business, which is 3 lakh rupee ticket size. So I call that affordable. So if I ask Jyoti, she might say affordable is 35 lakhs ticket size. So it varies. But still 35 lakh ticket size contributes to almost 90% in terms of number of cases which are active and almost 65% on value. But if you look at 15 lakhs, I would say real affordable is 15 lakh plus. That is where the volume growth is coming actually. Sub 15 lakhs contributes to almost 70% of the volume today. All these housing finance companies and the small finance banks, almost 11, 12 SFB licenses have been issued since 2016. And all of them are focusing on the small ticket segment, and all these 100 housing finance companies, barring one or two. I think Godrej would be an exception. Probably Bajaj would be an exception, barring these two who've got license post 2015. Rest everyone is in the informal housing space. So this space is growing pretty fast, and the number of loans which are getting processed here is pretty fast. So I was reading an article a couple of days back that new to credit market is increasing on personal loan, and that ratio was 19%. So I was laughing internally because for our company, my new to credit borrower is 30%. So I'm giving a largest loan of their life for the first time, who's not even taken a consumer durable loan from say Bajaj of the world or two-wheeler loan from any of the companies. So they are borrowing, and it is not that we are doing something very great. Where we started with 70% when we started our journey in 2011. Today it has come down to 35% new to credit, but still it is quite substantial. And all the new age companies which have come in into this space, new to credit is improving. That means the market is getting created. So the market is getting created beyond the 50 towns as well, where all the banks and formal segment HFCs are following.
Very
I can
interesting.
keep going on this. There's a lot to talk
Yeah,
about.
no, I think this is good start, a very good start, because I think it gives a good perspective on what the market was, and I think the 2 point I sort of want to take out and call out is, one is you said that it's underpenetrated segment, which means that there is enough opportunity and room for growth, right? So that's definitely from a market standpoint and from the companies which exist in the market, there's an opportunity for all of you to build a good business. The second is that the opportunity for the banks, of course, is more formal, and that's growing as well. But at the same time, what's very interesting is that the new to credit segment, the ones who have never taken these loans are not like part of the formal economy in some ways, are now getting the credit availability, which is where a lot of demand is coming. So the market is not just growing in one part of the segment, which is top 50, as you said, but it is across the entire strata. It is basically, you can see the expansion. So this is good for the country. This is good for the economy, and of course for every individual who's taking loans and building their houses for the first time. But let me take a quick switch on the question, and I think Godrej Housing is a relatively newer entity, if I may call Jyoti, in the segment. So coming out of and I would imagine that when the pandemic hit, right, is when your business was in the process of getting started, I would say. So I'm sure there will be some initial hiccups, challenges, or maybe you use that opportunity to build your other systems, processes, etc. But coming out of pandemic, when the business was getting formed, what were your views on the business? Like, did it ever change that the housing market would be bigger? Or whatever you planned for from a market standpoint, are you catering to the same market? Did you find a new opportunity pocket? Love to hear that story.
Thanks, Nilesh, for this opportunity. So, first of all, when we launched during pandemic, it was in the month of November. We actually launched the business. It was the peak, actually. You can say the first wave, and we were hitting the. I think that was a peak time for us. So, to just coming to the challenges that we faced, pandemic had its own challenges because we were not having our own staff and they were not able to travel to the customers point, and the customers also were not willing to meet our sales staff, and it was posing entirely the complete challenges for the customer acquisition part. So now from the beginning our thought process was always a kind of tech at the center and all the processes of the acquisition, right from the lead to the conversion and to the LOS and LMS, the entire flow, everything was planned in a digital way. Having said that, because of the pandemic, because our people also were not able to travel, little bit tweaking of the digital processes we had to do, but that kind of initial thought process actually saved us. So we have used our lead applications, and we have used our the digital journeys. We have built a lot of digital journeys in and around the lead management system, and all that has actually helped. You must have heard the touch free loans, and with that the so many issues were there during the pandemic, and after taking the feedback from multiple customers and also from our internal staff, what we have done is we have tweaked the entire process, and it is mortgage industry, and it's not possible to do a complete digital, right, end to end. The disbursement, you won't be till the disbursement you won't be able to do complete digital. You may be doing a kind of sanctioning, and you can bring that particular case to a stage where without much intervention you would be able to disburse. So that till that stage the entire process was digitized using lot of fintech solutions, and we have used e-sign solution for doing the most of the possible documents we have put under e-sign. And wherever the documents ram may agree, because regulatory issues are also there, some of the documents are to be signed by the customer, so those things we have arranged some kind of pickup service, and we have finally achieved the touch free loans. So this feedback has been really good, and where I'm seeing now more and more customers, actually our segment is into the salaried segment. We planned for the salaried segment as the initial stage, and we did have and we focused on the salaried segment right now also. And the market that we are looking for, these are mostly we are seeing most of the cases are from the software industry, and they are very digital savvy. That is the advantage that we are also getting, and they are adopting our processes. Because in the affordable segment and all, as I have worked in affordable segment also, I can say that customers are not very digital savvy. In that it would become a little bit challenge to adopt these kind of digital processes and all, but the segment and the cities that we have focused on, this process has really worked well for us, and it is really picking up.
Got it. Thank you so much, Jyoti. I have since we brought about the salaried segment question, and Ram mentioned about the affordable segment. So Ram, I have a couple of questions for you. One is, you're focused on the affordable part more, and of course the definition of affordable is different, but more on the low ticket home loan. So the big question is, because and you have a good business and a growth business. So what is attractive about this segment, number one? And since Jyoti mentioned that in this category, going pure digital is of course going to be a little bit more challenging than maybe the classic salaried segment. So when you look at the whole customer acquisition, how do you look at the whole, or where in the category you're focused on? What's your view? What has been your experience on driving digitization or driving productivity through some of those tech elements?
Okay, so first I'll take on why affordable housing is interesting or important. As I said, there is growth. There is growth beyond 50 cities also. So I'll give you one statistics. There are 1,70,000, 1.7 crore live home loans, and 90% of this is in top 50 towns. And India has close to, as per 2011 census, 26 lakh households with 130 crore population. So these top 50 towns have close to six 6 lakh households. So if we leave that aside, rest of the towns beyond top 50 have 100 crore has 100 crore population and less than 20 lakh loans. So the your penetration of home loan is less than 1% in these spaces. So customers in these territories are negatively aware that they cannot get a home loan if they don't have paper. So there you don't get the formal segment customers who file IT returns showing profits. There will be a lot of self-employed segments there, and even if they are salaried, there will be very less salary which the formal segment banks or HFCs would not cater to. So there is an opportunity. One is that, and second, there is compulsion for all the housing finance companies who come in now. All of these are started by new age and entrepreneurs. They start with triple B rating. At triple B rating, raising borrowing itself is a big challenge. Forget about cost of borrowing. So whatever rate they get, they borrow. So it ranges anywhere between 9% to 12%. When you are borrowing at a 12%, you will have to lend at 18%. So they don't have the luxury of borrowing it at lower cost in the initial stages. So if you have to sell it at a higher rate, then you'll have to go and create new market. And one conducive environment, what is there is if you have a good entrepreneur today, there are a lot of PEs who are ready to back you. So that is one big change what has happened in the last couple of years after seeing success of couple of affordable housing finance companies. So there is availability of capital, there is availability of talent in terms of management who is ready to take the punt, leaving their comfortable corporate jobs and get into these things. So all of this fuel is helping housing finance, affordable housing finance, and there is large profit pool as well in this. Because the market is getting created, you have the pricing power, and since you are funding the genuine customer, your delinquencies are at par with the formal segment, I would say.
Which is actually which is very, very amazing to look at that data. It was equal to the formal segment.
Correct. So that is one part. So that is why you can see a lot of entries who are coming into the affordable housing space.
Got it.
For the bigger players, the profit pool or the AUM pool is much smaller, so they would not be keen in getting into this space because it would take time to build. Like a couple of days back, we reached 10,000 crore AUM, but it took us 10 years. Probably the largest housing finance company or the largest bank in the country would be disbursing probably this much money in 1.5 months. So that is the variation.
Got it. So we'll come to a digital question just in a moment, but there's one question which comes to me, and I'd love to get Jyoti also involved. Is like, as you see this space evolving, right? Do you see more companies coming into this space, or do you see the time maybe in next couple of years the consolidation will start?
So Dilesh, I think there will a lot of new companies which will come in the next 4 or 5 years. Some will fail, some will succeed, and post that consolidation will start happening.
So you see the timeline as 5 years, 10 years?
It is my individual gut feel. I feel at least 5 years it will take.
5
because
years.
the industry is 5 years old now. 2014-15 is when this industry really started. Though a few companies started in 10-11, actual traction started in 14-15 in the affordable space, and few companies have become successful and they've scaled up quite decently, and more are following now. But there are very, very large numbers which have come in. They are still trying to get their foothold in the market. So there will be new entrants is what I feel, and there is enough space for many people coming who comes in.
So basically, which means that if you look at any large developed market like a US is a large developed market, right? And of course, we are a very smaller economy in many ways, but there are easily 1,000 lenders are there, right? And there'll be massive tens of thousands of brokers selling loans across the country. So by that stretch, I mean we are 1/10 in numbers, but so there is an opportunity for people to build housing companies in that space. So looking at this market, Jyoti, what's your view? Do you agree with Ram, or you have a different point of view in terms of how the market is going to shape up?
So I agree with Ram. So also housing finance industry is a very low margin business it is, and in this business the people who are able to operate at a lower operational cost will be able to sustain. So whoever is not, I think this consolidation is the only way to sustain and then go ahead in the business. And more companies are coming, but I am seeing the opportunity is also there for all the companies. I'm seeing a lot of everyone is posting the volumes and all the way we are seeing in the in the news and all. I think everyone is having the opportunity, but the way they operate, I think that is where the success mantra is there in this industry.
Got it. So now, since you brought the point of how companies get operated in the low margin category, if you don't operate at, if you're not, operationally better, then of course your profitability will suffer, and then which will of course result in a not so good company, and then you may get bought because of the quality of the book. Um, so so. Uh, so Ram, when you look at if you look at this as an argument in terms of building operational efficiencies, what's the how do you view digital? Because operational efficiency can be in all parts of the business, of course, from customer acquisition to collections to underwriting, paperwork. I'm sure there's a ton of paperwork in this segment. There's obviously government intervention also in when you register. I'm sure there's a process around that as well. So how do you where do you see gains are to be harvested? Like where there are costs can be reduced or profits can be improved. Like what's your view on that? On the digital side and the operational efficiency side.
I think digital will is the way forward. I would say, be it we are in affordable or affluent. So internet is catching up pretty fast. Like we have a customer app. We have majority of our customers in rural. Out of 1,30,000 customers, 48,000 customers are on app. So not many housing finance companies in the formal segment also has a formal app only for a housing finance. So the technology adoption is happening pretty fast from the consumer segment as well. So a couple of years back, we were doing zero business through digital channels. Today, 4-5% of our business, approximate to 4-5% comes through our website. So there is fast. This digital is changing pretty fast. And I think the first opportunity for any company to go digital is process automation. So process automation as I said, it is an emotional product and it is a high involvement product. Typically, this is only one product, either buying a home or buying a home loan, where the entire family, even the lady of the house, is involved in the decision making. So from the customer point of view, and from the same lender point of view, there are 4 or 5 departments. You have a cash flow underwriter, you have a legal person, you have a technical person, you have a fraud risk person, and you have an operation person. So there are 5 departments whose KRAs are different, working together to deliver the customer experience. And they have their own nuances in their work. So documents are not digitized, legal documents are not digitized, valuations are one side of the road, your valuation is 30% higher. The other side, there is an ala, you have the valuation is minus 50%. So there is a lot of physical verification, unstructured information available. So making everything digital will be difficult, but bringing all 5-6 of them together into one platform. So today, if I'm like 95% sure, I go to walk into any company and ask what is the status of this customer's file to a credit manager, he will never be able to tell seeing one system. He'll have to toggle between 3-4 systems or call 3-4 people and say, sir, this is the final status. This is when the customer would get his check. Whereas if we are able to provide one single window system to the customer, to an employee or even the customer, where his file is, then that would help the salespeople also to increase their productivity. By default, customer satisfaction levels will improve and employee productivity will improve by 15-20% only by doing this. There's a lot that can happen. And second point is a wishful thinking that government makes entire thing digital. You go to AP or Karnataka, you have a lot of documents which are digitized. But to access the documents, you need to log into their site and then do it. but that is not available in the other states. Like how you have Aadhaar, so you can access Aadhaar details through APIs today. The same way, if they are able to create APIs once all the legal documents are digitized in the country, I think it would not take more than a decade for all the documents to get digitized across the country. Once that happens, and then they provide API, the government provides APIs to the private players. That is when the real processing would happen faster in the legal system. And there are a lot of ways, even to with all digital aggregators of properties coming into picture, a lot of property valuations also are available online. And apart from that, over time, you also create your own database. So you can have your desktop valuations basis your own internal data and external data. So the moment the file a customer gives the application, the sales guy at least can know what is the tentative valuation of the property. Majority of the times is valuation gets due to valuation, we will not be able to fund the customer's requirement. So all of these are in the early stages now, but it would not take more than 2-3 years for these things also to get digitized, is what I feel. A company like ours, who is not into complete this space, we are trying to get a desktop valuation which should get delivered in the next couple of months for me. At least it will give me a tentative valuation, because I have 2 lakh customers valuation reports with me with latitude, longitude, which is stored in my data, which we have done in the last 10 years. Clubbing that with all your magic bricks and all these pricing. So there are platforms which are getting created to give you a valuation. Once you put in within 100-meter radius with this reference, you can get this valuation, and that accuracy can be very to the tune of 90-95%. So process automation is one big thing, which is a easy piece to do. So that I think every company sooner or later they will get on to that. And second one is your legal and technical
technical valuation.
It would take probably a couple of years, but it is not too far, is what I feel. 4-5 years down the line, if you have this thing, then everything would be automated. Like how a personal loan you are getting in a click of a button.
Yeah.
So a 50 lakh home loan also, if you are a salaried person, you will get it.
Okay.
And one more small challenge would be there will be a lot of mortgage lenders who are conventional in nature. So signing off a deal of a self-employed customer basis analytics would be very difficult for a person like me. So even that traditional mindset, which is basically a risk-averse mindset of senior management team, also would be a deterrent. Though there is a lot of quality data coming up in analytics today. Using technology and analytics, we can actually give decisions to 50 lakh customer on self-employed. But I think that also would change over time.
Got it. No, I think I wanted to ask, and you said initially the government side of the work, like when can government get ready, so in the same fashion as Aadhaar, because the first part around process automation is actually it's a no-brainer in many ways.
Yeah, correct.
It's a question of priority of the business today. Like I'm sure you have 50 things to take care. So, but it is something. It is a question of when the business wants to do it, because whenever you do it, you'll reap the benefits of doing so. And I think every business in their own ways will be in the path too. But so it was also interesting to learn that today 4 to 5% of our business is sourced online, which is actually a very interesting trend, given you work in a segment which is on the lower ticket loan. So which is actually which basically says that the penetration of digital and its adoption is increasing in that segment. And then the government if the government comes along and do their job better, or invest more on the tech side on the government side, I'm sure we'll all be benefiting from that. So I have one more question, but I'll come to that later. I want to get Jyoti's point of view on. I know she has spent so much time in the technology side, and also with TCS before, and now on the other side of the house, if I may. So, how do you view your own business today and the evolution of it? When you were in TCS and you were serving customers, and now here, basically the whole. Because you did mention that a lot of process automation is already in place with Godrej. So, would love to hear how have you sort of shaped that up?
So, since you are asking me to compare the earlier and now, so even if I compare 2 or 3 years back, the tech stack and the current tech stack, and there's a lot of difference in the thought process itself. First of all, I think the business and technology, the fine line between these things, these two departments is slowly is actually getting removed. So technology is expected to think like business, and business is actually thinking of all the emerging technologies, and they're trying to put that in their processes to get more and more efficient. So that is actually visible right from the customer acquisition. Few years back, when I was working in some of the organizations, and where that lead process, if I want to take, it used to be in the completely in the excels, and excel, they used to do some kind of conversions, and it was a completely manual. They used to get the extract out of the excel and sending it to the relevant departments to do the follow up, and get the lead converted. That process itself was very inefficient, and there were a lot of leads getting missed out, and not taking the proper action at the correct time and all. Now coming to the this the processing part, the complete the loan origination. So there were not much, not many fintechs a few years back, and everything used to be a kind of in it all depends upon your credit underwriter. So how good your credit underwriting person is thinking, and it all depends upon he putting the process according to his subjectivity, and then approving the case and all. So now we are seeing lot of scorecards are coming, and with a lot of data, and with AI and ML technologies, and the proper score is being given to the each customer, and all that area of credit underwriting is really evolving. And another initiative, if you see the government of India, maybe Nandan Nilekani's initiative, that is a open framework has come in picture. That is a open credit enabler. So this framework is still in the evolving phase. I think with this framework, we'll be able to get the correct assessment of the income of the customer. That is actually end objective of this particular open framework, where we will be able to the credit underwriting process subjectivity is slowly getting reduced with this one. Still it is evolving. I think in future I am seeing a lot of use cases in this area, and definitely it will be improving. And having said that, this industry is still a physical industry, because unless regulatory changes the complete regulations on this particular process, this complete journey is going to be a physical. So how good we are going to enhance all the physical touch points with this digital data is what is the all the CTOs are who are CEOs and all are focusing on, that how to enhance that physical channel with this digital data.
Yeah, I think the word phygital has really caught up, and it aptly describes the situation on the ground. That there is a digital, but there is a physical component to it, and this is an interesting point you mentioned. I have since we talked about digital, we talked about the evolution of the market, and we talked about the two things which you said, Jyoti, you said, and Ram, you said on the on how the government can improve their infrastructure, and if you can do the valuations better, and etc. In the way this digital is moving, what do you see, since you start sourcing 4 or 5% of the loans through digital channels, in your case, Ram, and maybe Jyoti, higher or lower? But how does a channel partner, like what should be the channel partner thinking now to build his business or her business, right? I mean, they may be working with you as partners to source, these loans for you. But as the market evolves, of course, the market is bigger, so more loans can be sourced. But in the era of digital, what should be, and what should they be doing, or what are they already doing in your view, which is going to make them still relevant, 4 or 5 years from now? Ram?
Similesh, what happens is there are a lot of new digital channels coming up. Few are at a very nascent stage, and few are at some advanced stage. So that there are a couple of digital aggregators who become the largest channels for many of the formal segments. Okay, and I feel the latest fintech boom, all the companies which are coming in, they're in fintech space. They're all, many of them are not into lending. Even if they are into lending, they are into small ticket lending. But I feel they are getting more and more data every day. So they have customers, to become profitable over long run, they'll have to do lending. So every fintech has to do lending, and that is not their expertise. Building technology and getting people on their platform is their expertise.
Expertise.
So they should focus on that core. Like how it happens in the US, it is the broker-driven business. There are few banks which lend basically, which are mortgage lenders, and rest everybody originates business. So they become originators for a lot of banks and even companies like ours. So they have the customer and we have the money. So it is as simple as that. So there will be new models which will get evolved. Like co-lending was a difficult thing in India given the regulators now. So regulator also is making it pretty clear. Initially, it used to be 6 months. After 6 months, we could assign the portfolio to the banks. Later, they made it 1 year, and during pandemic, they made it to 6 months. And then now they have said you can do co-origination as well. Co-lending you can do with risk sharing and profit sharing. So a lot of models will evolve regulatory wise also. Uh, as we grow forward, I think a lot of fintechs will become originators for large mortgage companies because they are getting good customers. They've started lending unsecured products. So it is matter of time they will start lending secured. And if you are running a fintech for 5-10 years, you will be burning cash. So when you are burning cash, you will not be able to borrow money. No bank will be ready to give you money.
Yes.
Though you have capital, no banker, if you go to a conventional banker, he will say, boss, you are loss making, whatever you are doing, it is fine. Your future might be green, but I will have to be answerable to my board. So
Yes.
raising funds would be difficult for them. So either they open their own bank or uh, NBFC separately, which is very difficult to run for them again. So instead, they can participate with other players. I think that model will evolve, is what I am feeling. So a lot of people are approaching different lenders already in the secured space. So this is not yet started full fledged, but I feel in the next couple of years, 1 or 2 years only, you can see a lot of change. All these fintech companies becoming originators for mortgage companies.
So can I then also say that these fintech companies are technology DSAs then, right? I mean, the classic DSA was more, offline personal relationship. These guys have like specialty in originating online, but if they're not putting their own money to lend, they're literally DSA replacement in many ways. Of course, they do not some, they do maybe a whole lot of pre-processing before it shows up to your desk, like to the lender's desk, but essentially they are really partners who are bringing the source of the loan. So,
Sure.
and they will grow. But what will happen to the traditional guy who is sourcing loans for like the traditional DSA? Will that person survive in 5 years?
I see you have these intermediaries in the top 50 towns if you look at it.
Mhm.
Beyond 50 towns, you don't have these people.
Okay.
Okay, these 50 towns, by a guy who's buying a 1 crore loan, a businessman typically would want to go with an advisor. See, your advisors will survive eternity. You have all gurus today, your spiritual gurus would survive for eternity. It is the same thing.
That's a good
All
one.
these cases have become gurus, financial gurus for all small-time businessmen. I feel they would survive for the next 5-10 years. But their scale, the contribution, what is coming from them will keep reducing substantially.
Got it. Got it. Got it. Got it.
And see, with the new fintech companies, a lot of market would get created, is what I feel. Because majority of fintech companies, very few are focused on the affluent segment. And a lot of fintech companies are focused on the small ticket segment, which is basically new to credit borrowers. So even for us, a lot of affordable housing finance companies which have brick and mortar setup, it is very difficult to reach all of them. Whereas these guys can reach more customers and they can give easy access to uh, companies like ours. But it would take some time for them also to, because it is a low margin business, as Jyoti said, they will not be able to rake in huge money by selling mortgages. But it will be a long term annuity, I would say. So they will also take some time to put this in their business model.
Understood. And also they may have to end up selling other products just to just not this product, but multiple other products, and maybe they have to evolve themselves into being somebody who can sell or offer, as you said, describe multiple product advisor in a fintech way, in a tech way, very similar to how you would model an individual person. Is how this would this would. So Jyoti, in your business, do you work with fintechs and for sourcing and how has been your experience? Do you see that business becoming bigger for you, the sourcing from there, or what's your observation?
So we do have plans for no having some partners with us, but right now the complete sourcing is happening with our own staff only, and we recently started going out of our no GPL. Till now we were doing with GPL properties and all. Now we started going out, and slowly this business will pick up, and we are ready with all our tools and technologies for expanding it with the property aggregators and the other DSA partners, and also with the other brokers and all. Plan is there, but not yet explored from our side.
Okay, got it. And so it's interesting question. So now I would love to hear some view on the book composition. Uh, so maybe I'll start with Jyoti. So you said a majority of the book is from the GPL side, but is it all new business book, or is it all loan against property and other products as well, along with that, like a construction loan, etc., or is it all the new book coming from the GPL side?
Most of the portion is from the new book coming from the GPL side. We recently started last month. We started with LAP and other segments, LAP and NRPs, and for the non-GPL also we started. But since we started 1 month back, and the book
So
size as compared to that GPL is very very good.
yes, okay. So Ram, in your what do you see? Because I'd love to hear your view on like how this outside of top 50 city market. I mean, how's that behaving in terms of the who's seeking more loan? The one who's fixing his house from what it was to new one, or just creating a new one, or like I mean, you may not have to share all the numbers, but some view would be really helpful.
We are a listed company. Wherever possible, I can always share.
Sure.
That's no problem. But typically beyond top 50, I think there is opportunity of business in both the segments. People want money to increase their businesses. There is lack of funds there. So there is a large opportunity there. There are a lot of companies which have come. There are a couple of companies which have already scaled up in that space, which have gone into tier 3, 4 cities. And there is enough opportunity in the housing space as well. Since we are a housing loan company, we try to maintain 75% of housing and 25% of non-housing. So we calibrate our business accordingly. So at least from my point of view, I get more of housing loans. We say no to a lot of non-housing loans every quarter, and when my ratios go beyond 25-26%, then I say no to non-housing loans. So there is demand for both in both the segments.
So when you say non-housing, you would still take, well, it's like a loan against property to run some business. Is that the non-housing description of
Yeah,
it?
that's right.
Okay, got it. Awesome, perfect. No, this is very interesting. We've done about a 45-minute session here. I thought I will just quickly bring in some of our audience to the into the mix and let them ask some questions. But meanwhile, they come in. Ram, love to hear if you have any additional point of view on the subject of the segment. There, in the housing side, on the borrowing, on the collections. I'd love to hear while Shubhani can scan the questions.
I think there's a lot of opportunity in every aspect of mortgages, particularly in the housing affordable space. I would talk a little more about it because the volumes are so high here. Over a period, you accumulate so many customers in a physical way. It is not even digital; it is pure physical. We have only a LMS, so book the loan. Rest everything is physical. Our guys go into the field and do the source the files and all. So even in collection, our bounce rates would be almost 2 times to the formal segment, and they're spread across different locations. So allocating these bounces to the collection team also is a time-consuming act if we don't use technology. So 3 years back, we used to do all of that in Excel. So we invested in technology today. The moment the presentation happens and there is a bounce, so automatically it goes to there a customer employee collection app which we have created. So whichever if there are 5 cases in one road, it will be allocated to one guy. So if he is going in 10 kilometers, he will get 5 cases in that particular place. So for us to do that manually, it was next to impossible. So
Got
there are
it.
a lot of things which are evolving over time.
Hey, Vaibhav.
Good afternoon, good evening.
So,
Yeah.
just for the audience, Vaibhav is the co-founder and CEO of Mudra Circle.
Hey, Vaibhav. Nice to meet you.
Pleasure, yes, sir. Thank you so much for making me visible from the event.
Would love that. Welcome. So you had a quite glad to host you here. Love to. So Vaibhav was in our audience, and I think Shibani saw him and thought to just bring him here. So Vaibhav, love to get a line from you on Mudra Circle, and if any question is for the panelists.
Yeah, so I'll tell you one of the reasons why actually I decided to just
Why by your voice is there's a lot of disturbance in the voice.
Yeah.
So one of the reasons why actually I was attending this is that yesterday, 2 days back, I heard a very good business idea from somebody regarding mortgage with. They are trying to create a system where they will onboard builders from across the country. They will digitize the processes of onboarding those builders for mortgage loans to these prospects. Yeah, that's where actually the likely CTO had actually called me. What's your idea? They were calling it as Bank. I said this is not Bank because there is no banking over here.
Why by your audio is not clear.
Vaibhav, your audio is not clear. We
Yeah.
can barely hear you.
Okay, better now?
So there's a lot of noise in the background. I don't know what.
There's a lot of noise in the background also.
Now is this better?
Not really.
Let me get the earphones.
Yeah.
Sure.
Meanwhile, if there are any other questions, Shivani, we can get them here.
Okay, so I'm just going to ask this. Maybe Nilesh, you can address it. So, Rajashree's question is, how is LeadSquared helping you, whether you're using it for sourcing or for collections?
Yeah, I hope it is not a planted question from LeadSquared side. It looks like a one somebody would plant, but I don't think I know Rajshri in my team. But anyway, I think LeadSquared is used for sourcing. For the sourcing process, digital and physical, including the agents, and it is also used for driving the collections process. Both digital collection to a degree, and then also the offline collections process. So we are partner to lenders. We work with several housing companies already, and yeah, so that.
Yeah, he's from Oryx, by the way. So yes, not a planted question.
Okay.
And to just add to what Nilesh said, we are successfully, we have used LeadSquare and we are using LeadSquare for the sourcing part. And it's really a value add in complete digitization of your lead management process until the beautiful analytics that we get. It will really improve your lead conversion. Yeah.
Thank you, Jyoti, for that little validation.
So if anybody else would like to share their views, please let me know. I will bring you up on stage.
I think we have some questions here. So there are some. One question is, what are the trends and pain points in foreclosure auction side for your organization or for the sector? Ram, I'd love to hear your view on that. This question from Gaurav.
Yeah. See, this foreclosure is an integral part of mortgage business. It's a long-term loan. People would like to switch if they are getting better terms because for any customer, this is the largest loan, the biggest investment for any person in their lifetime. So obviously, even a 25 bps reduction in the pricing would tempt them to go into the other things. So of course there is pressure, but we are much better off than any of the formal segment attrition. Our portfolio attrition is almost, I would say, 50% of what a formal segment would have it. because we are creating the market in rural areas. Not many lenders are available in that space because we go very deep in rural. We go up to tehsil level where our physical branches are there at the tehsil level. There are no lenders literally there. So there is no question of any balance transfers happening. So of course there is a lot of money which comes through own sources out here. Whenever they get some crop, they come and do part prepayment of the loans. So they are better credit conscious than the urban guys, I would say. Uh, so we are reaping benefits out of it being a first mover. So we don't have a major pressure on attrition as of now.
Got it. Got it. Got it. There's one more question I see from Gaurav. It's okay in an account aggregator role in housing finance. So are they linked? And I don't understand the OKN framework that well. So Jyoti, if you can share your views, love to hear.
Yeah.
Um,
So this OKEN is going to help you how you can estimate the customer's income. So right now what happens is your bank statements and all are, you have to take the bank statements and you have to do you have to depend upon your bank statement analyzer, and it will give you some insights and all. But through OKEN what will happen is a complete process is going to be digitized. By taking the customer consent, you will be able to connect to the bank and you will be able to take his income details. Of course, after the customer consent, this will eliminate the completely manual leg of doing taking the statement and scanning and uploading and then taking the insights from that. And account aggregator is the in between part, and I am seeing a lot of use cases in housing finance sector. And especially if you understand OKEN, what will happen is if you want to go to any different platform like maybe any of the property sites or any of the Amazons of the world or any of the Flipkarts of the world, if at all they become the loan service providers, you can have this OKEN framework and you will be able to integrate with multiple platforms without having to change your the API connector every time. So that is the advantage. It's a kind of UPI which has actually transformed the payments industry. OKEN is going to be similar to that UPI concept in the lending industry. I'm seeing a lot of use cases, and I hope people will be able to adopt slowly.
So is there a timeline in which this will get implemented or people will start adopting, and who are the early adopters?
Government contracts and all, so they have implemented OKEN right now. So other people, they formed a small consortium, I think, and around 13, 14, some banks, NBFCs and fintechs are part of that consortium, and currently that testing is going on for another set of use cases.
Got it. Got it. So there is thank you, Jyoti. There's another question from Amber. The question is, do you see traditional channel partners, the DSAs, moving digital to basically start submitting digital applications to lenders? Like they will do some work on their side and then send application to the lenders, or maybe it's already happening in some parts of the lending business. Not sure in housing if that's the case, but if this is something which you all see will happen in future, and how far do you see that's the likelihood of this to get adopted? Ram, any view?
Yeah. I think everybody will see technology. As I said, people are adopting. It is becoming cheap also comparatively. You get softwares from 1 lakh rupees to 100 crores also. So it all depends. Even a small time when DSA also can buy some software and do some customization from his side and become digital, as Jyoti said. So there will be a lot of people who would become digital now. A guy who starts earning some money in a DSA channel, he will definitely invest in some technology. And as I said, it is the same journey. Some will succeed, some will fail. People who succeed will grow a little bigger than what they are today. So it is a natural journey, is what I feel. But technology accessibility to entrepreneurs is quite higher than in the past now.
Awesome. There are no more questions here. I'd love to hear, and we're also just coming closer to the end of the session, about 4-5 minutes left. So, any final comments from Jyoti, you, from Ram on the segment, and for the audience in general?
So from my side, Nilesh, actually, as Ram said, digitization of the records, that land records and all, is very much required, because blockchain is a concept which will be reducing the frauds and all in this industry. Like you will be spending a lot of time in evaluating your property, legal details and evaluations and all. The digitization is really going to help, and this blockchain and all, as I mean, I'm seeing there's a lot of time for adoption of the blockchain, but as digitization of records will open up a lot of opportunities for more digitization in this industry.
Got it. Got it. Ram, any final comments before we close?
Yeah, I think I would like to say one thing. Digital is not only making life easy, it is also expanding avenues in every segment of life, I would say. So there is a lot of adoption happening, and that is opening a lot of new avenues, new products getting created. 1 rupee, what is that? 1 rupee mutual fund also getting started. It might look funny, but people have raised huge money with that. I think there's a lot of things digital will change our life for good. Uh, so the same thing will happen with mortgages as well. I feel there'll be a lot of automation which will happen going forward, and this will help scale up the industry. We are still at 10% of GDP. Even if you go to 20% in next say 10 years, so your AUM grows to 45 lakh crores, which is not even 45. It is even bigger than that. By that time, our
The economy will grow.
would have grown. So
Yeah.
it will come. There is a huge opportunity. Yeah?
It's a huge
So,
opportunity. No doubt. I have one question, and this is my trick question, maybe. Is what is the most outlandish thought you have about the housing business and the housing market and the lending market, which which you'd like to come true, but it's very difficult to make it work in the current situation. Like, what is the most imaginative idea you would like to implement, or would like to see that implemented like tomorrow? And anything you ever thought that ऐसा हो जाता तो, like if this would have happened, like what would that be?
see, I've been doing business for the last 26 years. Multiple businesses I've sold FMCG products. The easiest things, and I've sold loans for the last since 2004. So the easiest or the best thing what anyone would want is to give their customer the best. So if the customer approaches me today, if I'm able to tell him, yes, your check will be ready in next 1 hour, even if it is a home loan, that is dream come true. So today, that 5 years back, even for personal loan, nobody would have said that. It is possible today with click of a button, a 5 lakh personal loan can get credited into your account. There are multiple players who are already providing that. I feel that is a dream which will definitely come true before I move out of this industry. So I have still a lot of time to work in the industry. So before that, I'll be able to see that happening. So that point of time, probably we might reach 30% penetration to the GDP.
Absolutely. No, I think Awas has done phenomenal, and you've been a part of the great story, being part of the founding setup, building the business. So we all are the outsiders watching this whole story unfold. So certainly all the best to Awas team and you, and of course to the newly built business, Godrej Housing, to scale all the heights. But Jyoti, what is your outlandish thought?
So for me, home loan in 5 minutes. Home loan in 5 minutes, people do advertise, but it is only the sanction. Okay, but it's not the actual disbursement. So till the disbursement, it should be in 5 minutes, and that kind of rule engines and that kind of availability of the digital records should be there for us to evaluate the properties and all, and we should be able to disperse the amount to the builder or the customer. That is my thought process. We are just really working for the difficult rules and all now.
If that dream comes true, I'm just worried who's going to buy my software.
It can happen only with software providers like you.
Yeah, I have to change my business then. It's what I'm
So,
saying.
Nilesh,
your
it will
business
start
will
from
grow multifold with that.
It will start from LSQ. The automation starts from lead to the complete disbursement. Yeah.
Yeah, absolutely. Just just making a point here. But anyway, thank you so much, Ram. Thank you so much for coming in here and sharing your views with the audience. And Jyoti, thank you so much for coming here and sharing your views, and of course, thank you for being our customer as well. And it was a really wonderful session we had here today. And thank you, audience, for participating in this session. And hope to see you both in future sessions when we do. And love to host you again in future as well. Thank you so much.
Thank you very much, Nilesh.
Thank
Thanks,
you.
Ram.
Thank you.
Thank
Thanks.
you.
Thank you, Ram.